Hey, welcome to the exchange. So I've done various stock valuation videos in the past 3 months. I'll look back now and kind of see how they perform, whether right or wrong. Overall, give them my guidance. Also, too, look what could change in the near future, next 6 months or so time frame. Also, too, I'm going to do update videos for all of these stocks following the Q2 earnings reports, basically in July, August time frame for all these various companies. So if you haven't already, subscribe down below for update content just like this. But yeah, let's get started. So I launched my Redfin video April 7th, so which is right here. It was trading at 1534 back then. According to the actual basically valuation model itself, I mean, I was calling fair value at 1544. Given present day multiples, this probably should be a 16x right here. So looking at about 1235. So again, we are well below that mark right there. But again, I mentioned in the video even 2 months ago, the biggest risk factor here was obviously the housing correction or housing crash, which April, there was early signs of it, but it wasn't quite obvious now. Now it's a lot more obvious in the June timeframe. And really the biggest issue they're going to have is both real estate services. This will slow down, but it's still a pretty healthy, basic gross profit margin. You see like 33% right here. The big issue is going to be actually for them is the actual properties business. This is their iBuying business, which Zillow got out of this business. Redfin's going gung-ho for it. They're going all the way for it, which again, it's a risk though. And if it pays off for them, if there's no correction, no slowdown, they're going to be absolutely fine. But if we have a major housing correction or major housing crash, it can get very ugly very fast. So next up is Peloton Interactive. I did two videos, one in late April timeframe, one in May. Roughly around the $15 mark was actual value back then. The actual model, I gave it a 543 right now, so it's trading that direction right now. I mean, we'll see if it touches this valuation or not, though, but it's definitely getting very low very fast. And really, this is the big catalyst for this was the actual OPEX spending itself. I thought this would be slashed. I thought they would cut this down dramatically, after the last earnings report, but they have not. If anything, it's gone the wrong direction. It's trending in the wrong direction overall, too. They also launched the Peloton Rower, which I'm not that excited about too, because you think like Peloton, the bike itself, like market overall is pretty large. You think about the treads, pretty large market there too. The Rower to me is just a small market value itself. I mean, maybe it's cheap to produce, maybe it has great margins. Like we don't quite know that yet though too, but really if they're going to survive at all, it's really going to be the app space, app integrations, etc. That's where their future is and their future value actually is overall. And they know it too. The big problem there is barriers to entry from like Apple or Amazon or anybody else is much lower for the app side versus the actual hardware side. So next up is Allbirds. I launched a video for that one May 9th. So it's actually trading at 452 back then. The actual model I had actually, I was really looking for the 337 price, maybe $2 at the actual absolute low end, basically to match its peers on price sales ratio. Again, I still think it's a little bit high. I wouldn't jump in just quite yet. Now, anything sub 4, I think you're getting a pretty good deal overall too. Now, looking at actual operating income here, I mean, it's going to be negative for 2022 and for 2023. But hey, I'm saying by 2024, it should improve. It should go positive on that basis. And same thing with net income down here in 2024. So really, I mean, think about the cash burn rate and what they're doing right now. It should pivot, hopefully, if they keep growing and keep maintaining their overall kind of loyal fans, including myself overall too. But now, I was pretty negative on the digital stores, or actually the actual physical stores they launched, like New York, for example, like they're basically their flagship stores. I'm not as bad right now because there's only a handful of them overall, so the actual CapEx spend there is not too crazy. It's not too high overall, but again, something to watch. Now, I don't want to see them launch like 150 plus stores, coast to coast overall. If you're having a handful of flagship stores, I think that's totally fine from a cash burn perspective. But again, we'll see what happens here, but really anything sub 4, I actually like it quite a bit. So next is Roblox. My last video for that was in mid-May timeframe. Roughly trading around 32 or so. I've been following it really all spring, and really, I mean, you're seeing a strong decline really the entire spring timeframe. But I actually have a valuation of $56, which it seems kind of shocking though. But really, what I'm expecting is really 2024 and beyond timeframe. This is a massive ad platform, both for creators and for Roblox itself there too. Almost like YouTube is in a way where they show ads. It's almost like they can make game environments now that have ads or have like, really, hot end content basically from either developers or from basically major corporations itself. So, I mean, the actual revenue itself from in-game purchases itself might be a small portion of that massive ad revenue coming later on in probably about 2, maybe 3 years at the latest. So I'm not going to cover Striker Core in depth. This is actually a short seller report I covered back in April timeframe. If you want to see the video, I'll link it up top. That way you guys can find it. But back then, it was trading right around 260, 265 or so. Right now, we're at 194. And Spruce Point gave it a target price of 167, or I think 174 on the high side and 67 on the low side. So it still has a way to go to reach kind of their price target range overall. But again, it's moving that direction pretty hard and pretty fast. So next up is Take-Two Interactive. So if you're not familiar with Take-Two Interactive, they're a gaming studio, and they actually recently combined with Zynga Games, which is really a mobile-based game carrier, whereas Take-Two is more legacy-based systems itself. So now they have the full spectrum package right there. Now, it's been relatively flat, given all the market turmoil and everything we've had. I mean, literally since I had a video launched in late May, I gave it a 157 price target overall. So I mean, since then, I mean, it's been dead flat, even with all the market turmoil and etc. But no, I think this will recover. I think this is a very strong kind of combination platform. Really just a business powerhouse overall. So again, we'll see what happens there. But overall, I mean, I think the upside here is definitely there. It's not trading that far away right now, so maybe it's not a huge upside, but there is definitely an upside here with this business combination. So next was on Snowflake. I watched also a video late last month or so, and it's trading roughly around 130 or so. It has traded down overall. Now, valuation wise, I gave it a 151 price target here. Now, I am watching sales and marketing expense. It has creeped up a little bit. The trend there is definitely getting a little more negative. So if it accelerates even more after next earnings report, I might drop this price target down quite a bit. But again, they're having gross profit expansion overall. Their G&A is actually looking better than it was in 2022 or fiscal year 2022. So overall, I mean, this company is going to be strong. The upside is definitely there, but just like Take-Two, it may not be a massive upside compared to where they were before. So now let's do the EVs real fast. So this is Lucid and Rivian. So Lucid, I launched a video a few weeks ago. We're trading roughly in the $18, $19 range. Right now it's at $16.50. Looking at the actual stock valuation itself, I get an $11 price target there. And really my biggest question mark I have for them is really the gross margin percentage. I know it's going to be low in 2022, but really the question is how low is it going to be? We don't quite have the guidance on that just yet. So really the ramp up there is going to be very interesting to see how they actually do. Now this could be way low. Now if this is a way low estimate, I mean this valuation will creep up or will shoot up quite dramatically. Now if this goes negative in 2022, basically they're selling these basically cars below cost, then this could actually drop below 10 pretty easily too. So again, we don't quite know. It's not really a good play or a bad play. This is more of, hey, we need more information to actually be a solid investor within Lucid itself. So this is Rivian. I launched this video back in early June timeframe. It's trading roughly around $30, $31. Right now it's currently at 26. My actual price target for this one is $37. Really big question marks I'm going to have is really the ramp up speed itself. Their goal is to build 25,000 vehicles this fiscal year overall, which again, we'll see if they're going to ramp up to that or not. But again, right now they're behind the curve on that. Also, too, the OPEX spending and the cash burn rate is pretty heavy overall, too. So ideally, I want to see ramp up, come up, and hopefully the cash burn at least stabilizes or comes down potentially, too. Because right now, they're going to run out of cash by 2024 at this current burn rate. So last but not least, Palantir Technologies. I launched this video on June 1st. It's trading at $9.30. The actual valuation I gave it was right at that ballpark. It was $9.36. And really, I mean, overall, it's a great profit margin. I mean, the growth is slowing down overall, so we'll see what happens with that. OPEX is a little high, but it will come down, I'm saying by 2027 in general. But again, it's a pretty solid business overall. Really big question marks I have are, number one, the European government growth revenue. Like, will it ramp up there? Will it grow fast overall? Number two, U.S. commercial revenue. Will the growth rate actually maintain where it's at right now? And will the margins itself maintain where they're at right now for the foreseeable future? If they do, this valuation will increase quite dramatically. And if they don't, I think we'll be in this ballpark for basically the medium and maybe long-term future. Hey, but that's a quick rundown of all the stocks I covered in the last 3 months or so. I missed a couple of them here and there. I'm probably do a follow-up video for those later on too. If there's a stock you want to see me do a video on, be sure to comment it down below. I'll do that video probably in June or July timeframe. For all the stocks I covered today, though, I actually will do update videos for that basically after the Q2 earnings calls in July, August timeframe. I'm also going to link the videos down below for the latest videos of all these stocks, basically the long-form content, long-form breakdown, etc., kind of where they're at right now and why they're at where they're at, too. Also, be sure to sub the channel in the corner right there. Hey, thanks for support, and yeah, that's the exchange.